This Bitcoin drop could be the biggest warning or the biggest opportunity of the year, because Bitcoin just did something that shook the market. It fell below $80,000, fast, aggressive, and with almost no buyers. More than $100 billion disappeared in a single day. But here's the part most people missed. This crash didn't come with panic, no chaos, no screaming headlines. It came with silence. And silence in markets is dangerous. So the real question is this: are we seeing a temporary shakeout or the early signs of something much bigger? Let's break it down. Over the weekend, Bitcoin dropped hard, sliding into the mid-70,000s. That's more than 30% down from recent highs and the lowest price we've seen since April. But this wasn't just a Bitcoin story. Ethereum fell nearly 20% at its worst. Solana followed with double-digit losses. This wasn't calm selling. This was forced selling. In just 24 hours, $1.6 billion in leveraged positions were wiped out, mostly in Bitcoin and Ethereum. And when leverage breaks, it doesn't hesitate. It sells everything. It sells everything. Now pause for a second, because the price drop isn't the real problem. This wasn't a panic-driven crash. It was something worse. Interest. Liquidity was thin. Buy orders were missing. Retail investors didn't step in. Normally, a drop like this brings bargain hunters. This time, it didn't. Just empty order books. And that tells us something important. Confidence is fading. Bitcoin used to respond to macro signals. When the dollar weakened, Bitcoin rose. When gold rallied, Bitcoin followed. When fear increased, Bitcoin acted as a hedge. But this time, none of that happened. The dollar weakened. Gold hit record highs. Silver surged, then reversed. Bitcoin did nothing. And that's a message the market doesn't like. For years, Bitcoin was sold as two things: a high-growth asset and a hedge against fiat currency risk. Right now, it's struggling to be either. ETF money is quietly flowing out. Buy! Geopolitical fear isn't pushing demand, and institutions are choosing cash and precious metals instead. Gold and silver are becoming the fear trade again, not crypto. That shift matters because markets move on belief, and belief is cracking. There's another pressure building beneath the surface. Global tensions are rising. Warnings are escalating. And talk of broader conflict is back. Normally, uncertainty helps Bitcoin's narrative. This time, investors are doing the opposite. They're avoiding risk. Add to that regulatory delays in the United States, no clear market structure timeline, and institutions staying cautious. And suddenly, Bitcoin feels unsupported. Some analysts are saying retail interest is near extreme lows and trading volume could stay weak for months. So what does this mean for you? First, volatility isn't over. When liquidity disappears, price moves get violent. Second, this market punishes leverage. Fast moves and thin order books create liquidation cascades. Third, this is a decision zone, because moments like this usually do one of two things. They mark the end of a cycle, or they create the best long-term entries nobody wants at the time. Fear is rising. Uncertainty is everywhere. Confidence is cracking. And that's usually when markets prepare for their next major move, up or down. So here's the question you need to think about. Is Bitcoin losing its role as a global hedge? Or is this the final shakeout before the next explosive rally? Drop your prediction below, because whatever happens next, it won't be quiet.